The purpose of investing is often to generate passive income. Most investors want passive income because it allows them to receive a consistent income stream without putting in a lot of effort beyond the initial setup. Unlike active revenue sources such as running a shop, passive income enables you to gradually increase your income base without being overwhelmed and unable to go further. Hello and welcome to today's video, where we'll make a case for dividend stocks as a means of generating income and show you how to utilize them to produce passive income each month. Before we get started, please subscribe to the channel and turn on the post notification. Like, comment, and share. With that done, let's get started. What comes to your mind when you hear of passive income? Most people associate passive income with owning a firm controlled by others. Shaquille O'Neal, for example, currently owns 155 Five Guys, 150 car washes, 40 fitness clubs, 17 Auntie Anne's pretzels, and a retail mall. Shaq is the epitome of traditional passive income. However, another sort of passive income involves very little initial investment that anybody may begin. We're talking about passive income through stock dividends, one of the finest possibilities for passive income accessible to the typical investor. Before we go on, let's see what dividends are. In simple words, dividends are payments made directly to shareholders by a public firm. Dividends are used by businesses to return earnings to their owners or shareholders. To get a dividend, all you have to do is purchase a dividend-paying stock. Dividends are paid per share. Therefore, the more stocks you hold, the more dividends you will earn. Dividends are paid only when the company's leadership chooses to pay them. They are often given yearly or quarterly. When a corporation makes an exceptionally significant one-time profit or a huge quantity of cash, it may issue a special dividend. Dividends are paid from a company's earnings. Therefore, bigger and more profitable corporations are more likely to do so. However, dividends may be terminated at any moment, so purchasing a company that pays a dividend now does not guarantee that it will continue to do so in the future. When looking for dividend stocks to purchase, keep in mind the most basic investing rule: concentrate on your return. Buying a stock is not free and is typically not cheap. Therefore, the dividend you get should more than repay you for the purchase cost. To calculate your rate of return, check a stock's dividend yield. A stock's dividend yield is computed by dividing the stock's yearly payouts by its acquisition price. For example, a stock that costs $100 and pays $10 in dividends each year has a dividend yield of $10 divided by $100, or 10%. It is worth noting that dividend yield is greater for equities that pay big dividends and stocks that are less costly to purchase. So, you may earn a high dividend return by seeking companies that pay big dividends or looking for less costly equities that offer decent dividends. Fortunately, the dividend yield is a widely used financial metric that can be accessed on almost any online financial database, such as Yahoo Finance. Having understood what dividends are, let's now see how you can find and buy dividend stocks. Using internet financial search tools, it is relatively simple to find dividend-paying stocks. The equities may then be purchased using any platform that allows stock purchases, such as Charles Schwab, Fidelity, E-Trade, and Robinhood. However, keep in mind that purchasing stock is typically not free. You normally have to pay a commission charge each time you purchase and sell a stock on these platforms. For example, Robinhood is known for offering commission-free deals. Another way to locate and acquire dividend-paying equities is to invest in a dividend-focused ETF. ETFs are stock baskets that are exchanged on stock exchanges. ETFs come in various flavors, including some that solely invest in dividend-paying equities. ETFs may generally be found and purchased via the same firms described above. ETFs offer a significant benefit in that they cover a wide variety of dividend-paying equities, decreasing the risk of investing in a single firm that may lose value or cease paying dividends in the future. You might be looking to increase what you are getting from your initial dividend investment. If this is the case, you might want to consider dividend reinvesting. Dividend reinvesting is ideal for anybody wishing to increase their dividend income. This implies that any dividends earned are utilized to buy more of the same stock, allowing for even higher payouts in the future. This strategy boosts an investor's passive income base and hence their overall future revenue. This method is so prevalent that practically all major financial platforms provide the option to reinvest income automatically. And this technique is successful, with one research calculating that dividends have contributed 43% of the average yearly return of the S&P 500 index, which contains the 500 biggest public firms in America since 1930. When it comes to dividend stocks, investors have an almost dizzying amount of options. However, using a few basic criteria, we can assess which dividend stocks will most likely maintain profitability throughout recessions, continue to pay shareholders, and even increase dividends over time. Several dividend stock types are available, such as high yield and high growth, and investors may create their dividend portfolio depending on whatever combination best meets their needs. Dividend investment, in our opinion, is the finest strategy to build wealth over time, with several benefits over other methods of generating passive income. A monthly income of at least $100 is feasible for almost every portfolio designed with passive income in mind. If you believe dividend investing is for you, we suggest doing a lot of research beforehand. All investments have the risk of losing money, so you must be prepared before investing. This video is a fantastic place to start. After studying enough to feel confident with dividend investing, you can create an account with any major financial broker and begin trading. So, what do you think of the venture? Is it worth your investment for passive income? Also, if you have already invested in dividends, what is the experience like? Please share with us in the comments section. Don't forget to like if you enjoyed and subscribe for more content on finance. Until the next one, peace out.